Well, thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's a full Asia day, if you will, and it's a day which is marked by contrasting volatilities in some of the key um, FANG stocks, Facebook and Amazon. So let's kind of talk about the first key newsmakers. And tech and oil, I think, form the basis of the newsmakers this morning. So Meta or Facebook, of course. Now, I don't know if you call it Mang instead of FANG, but yeah, Meta's stock crash now ranks as the worst wipeout in the history of stock markets, single biggest day market cap loss for a company in the US and arguably the world. So that stands out. And at the same point of time, post numbers yesterday in aftermarket hours, Amazon is poised for the biggest ever market value gain in a day for itself, because it really put in an earnings number which was far better than what the street was working with. So that's the contrast that I was talking about. And there's a contrast in oil as well. Remember, yesterday I was talking about how the OPEC plus hike brought down oil prices in less than 24 hours. That hike notwithstanding, it was short-lived because oil prices have surged again. I think crude is trading above $90 a barrel, if I'm not wrong. So that's the long and short of really what's happening in Q newsmakers. Of course, if you bring up the markets, the Hong Kong market by itself, because it's starting to trade, is also a newsmaker in itself. But first, the US markets, and I think contrasts, as I said, because this, as we look at, okay, if you look at what the Nasdaq Composite did, it is very bad. But if you look at what the Nasdaq Composite is doing in after hours or the futures, it is doing reasonably okay, which is actually the good part. But it also brings forth the volatility in the Nasdaq, right? And there's this chart on the Bloomberg terminal which just shows how the pulls and pressures on Nasdaq is. I mean, yeah, it's just involved trying to do this, but look at this. The 1% move has become a near daily occurrence. It's the worst month since 2018, which is fine. But if you just look at what the Nasdaq has done in almost all of the last few days, it's had very large gyrations. The point is, it is not always in the red or always in the green as well, as it never will be. But there is no trending move in the Nasdaq. The point I'm trying to make is quite unlike what used to happen earlier, wherein the US tech stocks by and large had a really good, strong, swift up move. There's no trend anymore. Asia, as I said, ignore the gains in Hang Seng because it's starting to trade after 4 days. So it's a really strong reaction, if you will, to all that's happened in the last few. But aside of that, it's a bit of a mixed bag. Maybe marginally on the downside, but I would say a mixed bag. There's GX Nifty. The last time I checked on the website was in the green. Let's see what it is showing right now. Should come up on your screen next. Yes, about 0.5% or 70 odd points in the green. So that's how SGX is at least indicating that Indian markets will start trading. Now, I don't have too much in terms of my trade setup today, to be honest. I think the sell-off in US and geopolitics kind of counter, but the cues remain strong and therefore it'll start off okay. And I think FMCG is likely to be this space in focus again. If Tata Consumer did that yesterday, and while the stock came off, it kept FMCG in the hunt. I think ITC and to an extent the consumer space, not FMCG, but consumer space in focus because of Titan 2 after the numbers yesterday and the brokerage reactions today. So I think watch out for those. FIs sold about 1597 crores. So back to big selling ways after 2 or 3 days of slight lull. The DIs sold about 370 crores. That's okay. But the FI selling resumes, and that's the key point. Nevertheless, I think we're doing okay. Of course, we'll get to stocks to watch. There's a Chris Wood quote which we'll bring towards the end of this trade setup. But interestingly, notes how that year to date, FIs have sold about $8.4 billion, but the inflows of retail money into Indian mutual funds is northwards of 9 billion. That's what's countered this FI selling so beautifully from Indian market perspective. Nevertheless, will the mutual funds be enthused to buy ITC after these numbers? Don't quite know. So first, the numbers, the revenues were up about 30% at 18,365 crores. The Bloomberg estimate was 14,169. So way better than what the estimates were on the revenue front end, which is actually a really heartening sign. The problem is that the margins got butchered really. 500 or 600 basis points meet or whatever it is, but FMCG inflation and the agribusiness adjusted for, and remember, adjusted for excise, the revenue is about 15,000 odd crores. So you have to bear that in mind. However, the reported numbers, 30% versus the Bloomberg estimates of 37.8%, is a big miss on margins. That's the story of this quarter, isn't it? Margin misses for companies. But you have to say that it's not as bad simply because of adjusted for excise. The revenue is actually not 18,000 but 15,862 crores. But big beat on numbers, absolute numbers, miss on margins. The profit after tax numbers also kind of in line. So you got to keep that. I mean, I think the good part for ITC is that the core and the other businesses, they've done well. There has been no tax tinkering in the budget. So you got to be happy with that. CLSA certainly is happy with that. They have a buy rating with a target price of 285. And they are saying that, I mean, they're rational, of course, that the cigarettes volume at 12.5% as per CLSA estimates. The other FMCG business about 9.3%. EBITDA margin contraction, yes, but they believe the value unlocking should start as it looks at alternate structures for hotel and infotech in particular. And last quarter's analyst call was a big revelation on the ITC infotech business. They believe that capturing strong Q3, they are raising their FY22 revenues by about 5%. Let's see if ITC has a bit of a reaction today. If it does, it keeps the FMCG space in the hunt. Torrent Power, and again, the revenue is better, profit growth, but again, the margin miss. Does it come to hit the company? Don't quite know. As also in PI Industries, right? Torrent, much larger margin miss. PI not as much, but PI is a strong, expensive stock. You expect it to put all the best foot forward. There is a margin contraction, not as stark. That's the point. But yeah, revenue is up 17%. Net profit not as strong, up about 14% because the margins came off from 23.2 to 21.6%. So that's the long and short of PI Industries numbers. So keep that in mind. What else? Sub stocks include SIS, which has reported the highest ever quarterly revenue at 2601 crores and profit after tax at 101 crores, up about 47% quarter on quarter. Maybe this keeps SIS in the hunt today. Pfizer, the revenue was a beat, but margins cracked over 400 basis points. Similarly, GMM Ford, a very strong rise in revenues, but margins were down. We'll be talking to this management, I think today or Monday, one of the 2 days. You might want to tune in for that. And Sadhana Nitro, it's a small cap stock, I think spec chem, or chemical stock, commodity chemical, if I'm not wrong. But they've issued 65 lakh convertible warrants at 153 rupees per share. Now, why is this important? Because if you look at the stock price of Sadhana Nitro, it's at 139. The convertible warrant is at a higher price. Naturally, you would say the stock has been in a bit of an uptrend of late, so you've got to be careful. It was locked on an upper circuit yesterday as well at 139 rupees, but it's actually gained quite a bit in the last few days. So be mindful of that. If you do decide to trade this one, looking at the convertible warrants price. The stock, again, that was on an upper circuit yesterday was DB Realty. And, well, maybe with reason. I don't quite know. I haven't looked at the valuations. I don't quite know what this development means, but it is important seemingly. So I'm bringing it to you. After Prestige Estates, Godrej Properties has agreed to do a strategic platform to undertake redevelopment projects in Mumbai along with DB Realty. Godrej Properties will potentially invest up to 10% equity stake in the company. It's a long beaten down name. It's had a very checkered history, but now it's getting some very good suitors simply because I think it's got a few good projects in the city of Mumbai. But the key is, after this development, assuming it all goes through, look at the kind of people that DB are associated with. Now, post all of this, promoters of DB Realty will only have 54%. But Pinnacle Investments, which is the Irfan Razak or Prestige Estates Group, has about 18%. Godrej Properties will have about 10%. So two very strong pan-India real estate players have equity stake in DB Realty. It tells you a story or two about how slightly iffy stocks, if you will, all right, can become really good if they have the right suitors along with them. And I think DB Realty certainly has that. Now, again, I confess I have zero idea about the valuation, so you've got to be mindful of that. But I have very little doubt that DB Realty will be in action today, and for the right reasons, and will most probably do well. So, but be mindful, really. I mean, I have zero idea about what the valuations of these companies, of this company is. As I said, FMCG could be in focus. So Morgan Stanley on Titan is an interesting note. They've maintained the old weight with the target price raised to 2720. So that's the point. The 3Q earnings, they say, beat their estimates and consensus by 16% and 13%. Management sounded optimistic on near and medium term business outlook as well. So they are bullish. If you want to hear what the management sounds like, 9:45 a.m., you will hear the conversation of the Titan management with me. So you might want to tune in for that. And yeah, but their target price, as I said, is 2720. So keep that at the back of your mind. Lastly, actually, just a quick summary of the results. Titan, of course, numbers came yesterday, but could be okay. DB Realty could be okay. Sadhana Nitro could be okay. There could be some traction in SIS. Torrent Power plays a big margin crack, but I was just looking at the other analysis. Well, the company's gained a little bit on a QOQ basis. It's been okay, but sales were doing okay. So maybe Torrent Power has something going for it. And a couple of other small names like Kena Metal India and HG Infra had decent numbers. So maybe these two could be okay in trade as well. Before we wrap up, if you're a long-term thinker, or if you're even a near-term thinker, I think these two quotes from Chris Wood from his note, Greed and Fear, could be interesting. He says that greed and fear remains firmly of the view that externally driven corrections are buying opportunities in India. In India, by the way, since if the current housing upturn in India proves to be a lead indicator of a broader private sector capex cycle, as was the case in 2002, 2003, a lot of you may not have seen that cycle, but I'm still bringing it out to you. He says then India should once again become one of the best performing stock markets in Asia, as it was between 2003 and 2007. I think then India was second only to Indonesia. And Indonesia then too was a much smaller market than India, I think. So keep that in mind. He says that greed, and this is something that could interest a lot of you, and just maths really, but I'm still bringing it to you. He says that greed and fear would like this week to signal that a target of Sensex at 1 lakh is now eminently achievable on a 5-year view, assuming that a trend of 15% EPS growth and a 5-year average multiple of 19.4 is maintained. Some assumptions there, but well, Chris Wood is not alone, but he's a big global voice, and if he says this and his newsletter is read by various people across the world, if he says, you got to pay attention. So two interesting things from the Chris Wood side. The story around what Chris Wood is trying to say will be on the BloombergQuint website by about 9 a.m. You can log in and read that as well. Nevertheless, this is the long and short of it. Remember, Titan at about 9:45, at about 10 a.m. We'll have at 11 a.m. we'll have the interaction with JP Morgan on the budget and what it means for Indian equities. You might want to tune in for that. So a couple of very interesting conversations lined up, and you can get all of these details on our website as well. Thanks so much for tuning in today, viewers. Have a safe day ahead. If you're stepping out, please stay masked up.